Well, for more on Tesla's performance, let's bring in Karl Brauer via Skype. He's the executive publisher of CarExpert.com. Thank you for joining us.
Hey, great to be on with you.
So as we look at the earnings highlights and investors' reactions over the past day, what have been your big takeaways?
Well, there's this kind of mix of good and bad news, and I think you've covered it well. And I think, when you see some of the fundamentals, whether it's the growth in the profit, the growth in the deliveries, even revenue was a little short, but close to what he was shooting for. It seems like everything's moving in the right direction. And I think if you want to pick on the idea of the credits and even some Bitcoin sales as part of his profit, that's fair. But he's still growing the profitability of the company and looking like eventually he won't need to rely on those. So those things all I think are encouraging. But then you get into the other realities out there, whether it's the realities of increased electric car competition, both from European and U.S. and Chinese companies,
right.
And the fact that whether he's having more cars that are being sold, more electric cars coming from other companies, or the fact that he won't be able to sell those credits to those companies any longer because they'll have their own electric vehicles to give them the credits that they're right now buying from him. It's going to be a lot about the timing. It's going to be a lot of the timing on whether he can get to a level of profitability and maintain some level of market share and the growth that he's on in spite of some of these other factors.
So for people who are new to some of these concepts, then explain how the emissions credits work and the role that they really played in this Q1 data for Tesla.
Sure. As an electric car maker, he essentially doesn't have any emissions worries because his cars don't do any emissions. So he gets all this government incentive because all of his vehicles are emissions free. And so he can sell those to other car companies who don't have those emission free vehicles, basically traditional automakers with internal combustion engines. And he made, $500 million, $500 million, give or take, on those credits. And so that won't last forever. He eventually won't be able to sell those credits to other companies because they won't need them once they've got their own electric fleets and they're all moving that way.
And just quickly, as we mentioned Bitcoin there, what is Tesla's strategy there? What's the end game?
Well, it's Elon Musk, so that's always a tough question to answer. I think the concept that he wanted to raise awareness of Bitcoin by buying some and maybe raise the value as well and then sell some of them after that happened, you certainly can make that argument, and it's hard to deny the reality of that happening. But he's trying to say that it's the next form of currency, that it's not dependent on traditional currency, it's got more flexibility, to the point where he was willing to take Bitcoin payments for his own cars. So I think, among other things, he's trying to continue to be Elon Musk and look like he's thinking ahead of everybody and thinking differently than everybody else.
And we certainly hope that came into play in terms of what we saw with the pandemic, disrupting supply chains. Obviously, you have the semiconductor shortages. How is all that impacting car production and order delivery?
It's really a tough row for them right now. I mean, they're in a tough position globally. I have not seen anything like this for probably at least 10 years since the recession, in terms of there being this kind of inability to project how well you'll be able to build and sell your cars, because there's a big variable out there that you can't account for, in this case, the chip shortage. And you've got huge global automakers. I mean, Ford makes so many F-150s and they make a lot of profit on those, and they're having to finish building them without all the chips in and store them until they get the chips to finish putting those in. And when you have a company like Ford with a product as important as the F-150 for their profits, and that's happening to it, you know how kind of deep this cuts across the entire industry. And it doesn't look like there's any short-term fix here. That's the scary thing. It could go on throughout 2021 and into 2022.
So then, adding to the concerns, there have also obviously been some public relations issues. For example, what we saw at the Shanghai Auto Show over allegations of faulty brakes, and then Tesla's response. Talk about the relationship with China, as well as Chinese consumers specifically.
I think he was able to come into China years ago, into that market, and start introducing the electric vehicles with his brand and really be seen as kind of a premium car company. And I think there was even more, I think they were even quicker to embrace Tesla to some extent in China than they were in the US. I think they were more open to that idea. And so that really has benefited him, and it's been a huge part of his success over the last 2 to 4 years, the sales in China. But again, there's more competition in China, so there's more opportunities and more options for Chinese electric vehicle buyers now than there was even 6 or 12 months ago, plus some PR issues and some communication issues with that market and how they're appearing there, and that would be a huge blow to Tesla if there was any sort of hiccup in his projected and past growth in China. If that didn't continue, that would be very bad for him.